Good to go. All right. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for May 6th, 2020. Q's up 0.62, SPY down 0.65. If you're in the room, we noted the divergence in the room right away. The SPY was coming in right off the bat this morning, while the Q's were working its way up, right? Eventually did come in, but then recovered very nicely. And what we're seeing here is that, the big tech names really staying strong, leading the Qs up higher, while the SPY has ran out of steam a bit here. You can see it's really, really lagging. How much that this has recovered in comparison to the Qs off the lows is a pretty significant difference. And so this kind of divergence between the two, while both still remain in an uptrend, right? The SPY, at least in the shorter term, is starting to look more and more like we are ready to act on the weekly sell setup. Now, we've been talking about this weekly sell setup, probably already anticipating it since the beginning of April, and finally triggered this week, but hasn't really followed through yet. We'll see if the SPY is what leads the market lower here, as the Qs have really been holding up well. And we've seen that also with a lot of the big tech names that have stayed pretty bullish. A lot of them have reported now. And so that divergence we've seen, is what kind of made me neutral coming into today, and will still be neutral going into tomorrow, right? Especially this hourly here on the SPY, at least from what we've gotten this week, looking like it wants to do a downtrend. Okay, and I've talked about this before, that on the time frame that you're looking at, if you're seeing that the price is spending time above and then going below and then back above, then we are without a trend on the time frame that you're looking at. Now, if we go to the daily, which has been, out of the time frames that we've been watching, the most bullish, and you can see above the 20 MA and stayed above the 20 MA, and especially on the Qs here, right? Nice uptrend here, sustainable uptrend above the 20 MA and staying there. So if you weren't sure if we've been in an uptrend for the last month, this is a nice shortcut. But what we're seeing, at least on the shorter time frames here, on the hourly, is that we're spending time above and below. Now the Qs, can't argue with the Qs still being in an uptrend here on the hourly, despite the SPY trying to roll over. Okay, so there's, I think, still some this divergence has to play out. And if that divergence means that it becomes a stock pickers market, which is a very kind of cliche thing, but the idea that some companies are really going to hurt in this economy moving forward, while others will do really well, it's kind of the opposite sentiment of a rising tide raises all boats. Like when the economy is doing really, really well, and most companies are going to do really well, we may see less of that, right? Really see different sectors do well while others really suffer. And that seems to be what this kind of divergence is suggesting. Now, going into tomorrow, like I said, still going to be neutral, okay, which is fine. Neutral, you could look at it as we don't have a strong bias on the market, but also maybe that means we get chances to play both long and short, okay, and that was the case today, okay. So today, start off the day with the CLVS here, just a 1 minute base breakout here, okay, breakout above the highs, basing at the highs, breakout. 860 by 840 was the call. First target was $9, so around 2 Rs on the first target. I said just go ahead and take half as we got to $8.95. Okay, as we broke above $9, it said take another quarter. Okay, and then we held the runner until it trailed under 868, which is a little bit better than break even. So the runner kind of ran out of steam there. You can see that the trend ended, but that's the whole point of trailing the runner the way that I do, is that I want to be in it as long as it maintains the trend. If the trend's going to end, it's typically not a bad place to trail it. Remember, if you played the WRK yesterday, that was pretty nice, and that kept you in all day. So, the CLVS, not a bad trail. It would have been nicer to get it all out. We were only, I think, like 10 cents away from the last target, and it never got there. So, in that regard, it's a little disappointing, but we still got out of it, and you can see it would have closed here at the low, so that's fine. It was still a pretty nice play in the morning, that long on the CLVS. And, sometimes we talk about, the pain of missing out on a trade, but it doesn't always have to be purely a bad thing. I did feel like I missed this AKBA breakout yesterday, high of the day base breakout, nice consolidation here at the top, and that was kind of the best that I saw. Let it go, thought it was a little bit too maybe jumpy and spready, and and today kind of with the CLVS, very same pattern, got a chance to kind of redeem myself there. So, absolutely this, stuck with me yesterday after the close, reviewed it, and even into this morning. So as soon as I kind of got that pitch again, I wasn't going to pass on it. So, sometimes those kind of things are painful, but also help to motivate us and provide us learning opportunities as well. So it's not always just a bad, painful thing to miss out on a trade. Okay, and then in the afternoon here, played the EAF breakdown. So it was under 75. We had a nice tight base here, but I was using the 83 as the stop here, up here. We broke down, and it didn't go right away. Once the 15-minute caught up, then we finally got going here. Okay, and this we just closed at the end of the day. We did take some on the first drop to 665, and another quarter as we made new lows. And then just close the runner here at the end of the day, because as you can see, for the afternoon, a lot of them we stay until the end of the day, just because it's very unlikely that the hourly trails. Okay, so that was the breakdown there on the EAF. You can see, looking at this 15-minute chart, probably got a little bit in too early because it was extended on the 15, but once the extension on the 15 caught up, then that gave it the nice kind of push down. Market also helped, right? So not too bad there on the EAF either. So that was nice on the better play in the morning on the CLVS, but not bad either on the EAF short here in the afternoon. Okay, so I thought it was a decent day, even though kind of the gaps weren't that good, but eventually I think we found some things to do and made something out of it. So hopefully you did well today. If not, we'll be back at it tomorrow. All right, and I'll talk to you then. All right, I think the market has some things it needs to work out with this divergence between the Qs and SPY. So I'm going to be neutral going into tomorrow. All right, have a good evening.